Alright, what's up guys? I hope you're doing well. James here from jamesdforsythe.com, and I just kind of wanted to take a few minutes to talk about like how, especially for me, how I'm personally going through this, but like how to decide what to invest in, right? And so kind of like what do you even want to do with this? I mean, like everyone talks about retirement and everything, and obviously I'm rather young to be thinking of that, at least what people tell me. But regardless, that's neither here nor there. It's one of those things. It's something I became rather fascinated with in college, and not just investing in general, but mostly like the whole macro environment, economics, kind of like a side focus, and almost in a way, I guess. Um, I guess it is one of the few things that has really kind of spoken to me in a way. And what I mean by that is I chose physics for a reason to go to college for, right? Mostly because it's one of the few things that I was difficult enough and complex enough to where I don't get bored, right? And and I'm one of those. I can't get bored. I have to be doing something all the time, and basically it's complex enough to where I can basically obsess or fascinate over it for a long period of time and actually, take care of myself in that respect. But I say that because even though I'm very young, I have been thinking about this for quite a few years, obviously not claiming to be any form of expert in the least bit, but this is basically what I've kind of gathered from what I have learned from basically consuming content from many different experts in various different fields, specifically with as relating to investing. So like real estate, stocks, bonds, paper assets in general, commodities, actual physical things like farmland, everything, right? I've looked a little bit into pretty much at least all that I can think of. Derivatives, like anything, just because I think it's interesting, right? And I can basically do that all day. Hence, kind of how this whole channel and the website and everything started to begin with. But one of the major things that I've noticed with respect to investing and how you kind of decide what's for you, because there's so many options to choose from, there's so many things to kind of get to fall into, whether it be a rabbit hole, whatever. But you kind of have to think of everything in general, and so it's really, I kind of have rough points pushed out for myself. So you kind of have to think of it from multiple things in terms of looking into a specific asset class, or at least this is how I think of it. And it really depends on what you know, like already, what do you already know, like how old are you, so like what industry were you in, like what have you done with your life, what kind of things do you already know about, right? If you're a realtor, real estate's kind of an easy thing to get pushed into because you already understand that, right? There's less of a learning curve now to learn that separate side of things. At least it's what it seems to me. There's also the whole what are you willing to study, because it's one of those things that I've noticed too, is just kind of maintaining wealth that you've built throughout your life, no matter what that magnitude is, right? There's a certain degree of study that comes along to keep it. And yes, your spending habits and all of that are heavily reflected in that. But it's also like, if you want to build it specifically in terms of like investing in something, you have to legitimately study. I pick study for a reason, because that's really what it kind of requires. At least, I don't know if that's just how I am, to where I enjoy actually studying this kind of stuff. Hence all of the blog posts I've gone over and videos, the books. I'm obviously an avid reader. If you go through my stuff, that sort of thing, that's what I do, right? In that respect. But not to get too far off topic in terms of how to kind of decide what you want to invest in or what would be good for you, it also kind of reflects your personality, right? And kind of how you are as a person. At least I've noticed that for me, not just kind of your knowledge base in general, right? And that's another thing you have to think about in terms of asset classes, is that there's so many they all have different characteristics, and there's kind of pros and cons of all of them, right? And so you have to think of it in terms of like liquidity, right? If you want something that you can, if you make a bad decision or whatever, you can pull out real quick, and then maybe some form of paper assets best for you, right? Something that's rather liquid all the time. Blue chip stocks, whatever, maybe just to throw out an example, right? And then, but if you don't particularly care about that and you kind of don't want to be as in tune with it, maybe, and obviously all of this is kind of on a sliding scale. Maybe if you want something that's are looking more to like the real estate route, you have to understand like, okay, yes, but it's also relative to stocks significantly in liquid, right? If you make a bad choice or a bad decision in a real estate deal, it's much more difficult to pull out relative to stocks, right? And this is just to give an example, right? And it's not so much to say stocks are better than real estate or real estate's better than stocks. It just kind of depends, right? It's kind to me, it's kind of like a personal choice in a way. I don't really know if choice is the best word for it, but it really depends on you, right? It's kind of your own preference based on what you know, what you want to do, what you're willing to do, that sort of thing, right? So keeping all those in mind. And also, there's also a great book called The Intelligent Investor by Benjamin Graham, right? And I also like his other one, Securities Analysis, and that one's a boat anchor, that's for sure. It can get rather boring at times if you're not interested. I actually had to like put post-it notes every 30 pages on that one. Whatever, I think maybe it was more than 30. I don't know, but I had to set a goal of what to read each day at certain parts of it because it was just more difficult and could get not more difficult, more technical, right? And sometimes even for me to do that every single day is I actually have to focus and get it done, right? So keeping that in mind, right? But there is kind of a general one thing that I've noticed, especially in terms of if you look at kind of, I guess we'll say the world-renowned investors in kind of the grand scheme of things, regardless of asset classes, it seems like they all kind of have similar characteristics or they kind of look for similar things, right? And not necessarily how I'm going to call it their framework, right? How they kind of make their decisions for each trade or each investment or whatever it is, right? Each deal. They all kind of make decisions in a similar fashion. And that's kind of the reason why I brought up Benjamin Graham's book, kind of looking more into sort of a kind of a deep value investing territory, right? And that's just one way to look into it. And that's another thing is like what are you wanting to do? Are you wanting to actually trade? Or are you wanting to actually like invest in things? And I'm one of those that I think there is a distinction between investing and speculating, and I do agree with Benjamin Graham in that respect. And I highly recommend you guys actually read that book. I think it's a good one. I enjoyed it, but it really kind of helps you think, and look into the nuances that I think you really have to do for investing in general. There's so much nuance, and this isn't just specific to investing. This is one thing I've noticed in pretty much anything that I've studied, whether it be history, psychology, physics. There's always a technicality. There's always nuance, and it's just you have to go into the nuances to actually fully understand something. And that's one thing I've kind of noticed as I've gained more experience, not only in my kind of career or my studies in general, is there is a difference between knowing something and actually understanding something. And it's like you read something and people think that they understand it just because they read it, but not really. You're just kind of aware of it, right? And it's not until you actually have to apply whatever your awareness is in to something to actually apply it somewhere to where you can actually start to understand it, right? In kind of a more personal example with what I do for work, it's kind of the difference between people who are in the office and people who are in the field, right? If you get an office guy who's never been in the field and they basically just see it as crunching numbers, a lot of the time it just doesn't translate well from what I've noticed. Or at least that's what it seems like, right? I guess kind of a decent segue for this is you have to think of this game, because I do think it's kind of a game, in terms of probabilities, right? It really is like there's so many different things that could happen. There's so many different cross currents, especially when you look into kind of or start studying the depths of like global macro and all the different things there are in terms of what can affect investing in general or an investment. Pick a specific one and then just imagine how many different things could change it, right? And then you can have like secondary effects, and there's so many different things that could happen from events, right? So you really have to think of it as a kind of a game of probabilities, right? And that's where you get into the concept of risk adjusted returns, right? And that's where I think that the best portfolio in that respect, regardless of what your kind of asset class is that you're trying to specialize in or whatever, it's not necessarily the highest ROI as a percentage is the best, right? Because you do have to keep in mind that there's one thing I've noticed that I think is a mistake, at least as of right now, from my understanding of things, is that people only look at the monetary price of things, right? So, like, what's the financial cost or whatever? How is it going to hurt your pocketbook, right? Or your wallet, whatever. And I don't think that's a great way to look at things, because that's not the only aspect of things. Like, for example, if you have, we'll use a typical, or I don't know, typical, but random example, you have a bunch of equities in a brokerage account, whatever, and you're weighed 50% in one sector, right? Because you're really bullish on it. But you don't sleep well at night because half of your net worth, let's just, for our hypothetical example, say that's basically all you do is just have everything and most of your net worth in your equity portfolio, right? And all of that's in 50% of it. All of that 50% of basically your net worth is in one thing. And I'm sure there's some people who have more than 50%, and you're not sleeping at night. That's a cost in and of itself, right? There's other things like I don't even really want to say your mental health, but just kind of your well-being in general, right? There's costs to everything that you don't really see, opportunity costs, a bunch of things, right? And I think my point is you can't just look at it from the perspective of money, right? And that's kind of why you have to look at risk adjusted returns, I think, depending on what you're getting into. And kind of a segue into that, especially since I've kind of started talking about kind of portfolio construction in a very superficial way, right? And so it's the whole everything has to have a purpose, right? And that's kind of where it goes into the whole risk adjusted part of it as well, at least from my perspective. So you say, like, you think for a hypothetical person, okay, they have they believe in gold and they think it's an insurance against their or for their wealth, right? Not necessarily to get more wealthy or to basically get richer by owning gold, but basically they just see it as only preservation. It's that is the fundamental value, whatever, for our example. And they're basically just arguing, it's like, hey, this is my insurance, right? Of all the wealth and value I have produced in my life, whatever percentage of it, I put only in gold as insurance for whatever could happen, period, right? That's the purpose of it. So the price of gold on the COMEX, I believe, could go down 90% or whatever in a week. They shouldn't care, because that's not the purpose of having the gold in there to begin with. And keeping in mind that whatever that price of the gold was in a different currency, right? Or was in a currency, right? We'll use the example of dollars, I guess. Obviously, it's a very extreme example, makes no kind of logical sense in a way. I don't want to say logical sense, but to have that happen in real life would be unfathomable, I think. But it's kind of just to illustrate a point, right? And so that gold served a certain purpose. So regardless of what the price is, and you kind of have to think in that respect, what would happen if that did happen? Like, what would be happening in the world? Would you actually be able to use that gold for regular transactions? Maybe. But that's kind of just my point, is everything has a specific purpose, and you can't get too swayed outside of that. And that, whether that be individual positions, whether that be entire asset classes, maybe you have some in equities, some real estate, something else, whatever, fine art, I don't know. Just an example. They all serve a certain purpose, and that's why you bought it, and so that's why you did it, right? And so you can't get pulled away from that, because whenever you buy something for a specific purpose and then you sell it for another, it kind of defeats it in general, and that's kind of when you get screwed. It's the best term I could think of at the moment. At least that be family friendly. So anyways, those are just kind of some of the things I've been thinking about the past few hours. So I thought I'd hop on here and share and give some bullet points to try to keep a coherent argument, because if any of you guys have seen some of my original videos, you know how much I liked going down random rabbit holes and not coming out. So light years ahead of where it started a couple years ago. But anyways, I'm going to leave it there. So I hope you guys have a good night, and I will see you on the next one.